Let's continue with the retail story. For that, we're joined by Joe Feldman. Joe is managing director at Telsey Advisory Group, an independent research and consulting firm with a focus on retail. Now, last year, Institutional Investor ranked Telsey #1 in specialty stores and department stores and #2 in apparel and footwear. Joe, great to see you. So, are you surprised by the strong chain store sales numbers given the weak economy and the high rate of unemployment?
Not really. The truth is the numbers came out about as we had expected. We had thought that there was too much pessimism heading into this report today, that people were really worried. And that's why I think about half the retailers, particularly in the specialty apparel and department store size, did a little bit better. I was a little surprised that some of the retailers that I'm primarily responsible for, the discounters, didn't do a little better. That said, they still were up in the low to mid-single digits.
Still, is this enough to make a trend? Because some other analysts are pointing to the hot weather, sending people into the shopping malls, and also the fact that where Memorial Day fell on the calendar. So what are you forecasting now for July and onward? I mean, is this growth significant enough to build on the 3% number we saw today?
Yeah, we're still optimistic about the consumer, and we still think that we're still going to see, positive low single-digit type same-store sales numbers through the back-to-school period anyway. And we think that, look, the consumer will come out and shop and will continue to spend. I think that what you're seeing here today is there's a lot of reaction to what the expectation was. I think, based where we were in March, people thought that numbers would have been better at this point in the year. They've certainly slowed in April, May, and now June has kind of been more stable. And the numbers really weren't that bad. I think that if you take it from that approach, retail is okay. And the truth is there were no profit revisions. Most of the few that there were upwards.
So which ones, Sue just did the story on us, but in your view, who's positioned to benefit here in the future? Who are the winners? We know Gap was a big loser, and you just pointed out you cover a lot of the discount retailers. They were losers as well.
Right. Well, now what's interesting there is, for example, Target, were they a loser? They were up 1.7%, which was a nice trend. They continued the positive trend. Apparel sales were actually up in one of the stronger categories for them, and we would expect them to have a pretty decent back-to-school period. So I think that they're actually performing okay. Costco, BJ's, yes, they did come in a little below, but they were still up 3–4%. So I think that the trends are there, and the consumer is out there shopping. Granted, it's still on basics. It's still on basic consumable items for the home, but they're out there spending, and so we don't think it's all gloom and doom.
Okay, is it enough, though? Is spending going to be enough to light a fire under the sluggish economy and have a broader impact?
I'm not certain that it's going to necessarily light the economy up. The truth is we need more jobs. Employment is the key driver of just about everything in the economy, and we're not there yet. It seems like we're more stable. I don't think it's as gloomy as some people think out there, but as the job market starts to improve, you'll see retail sales improve. I think you'll see housing start to improve. Everything will follow from that.
We sure hope that's true. Joe Feldman is the managing director at Telsey Advisory Group. Many thanks.
Thank you.